My name is Abdullah Mtawa. I'm the head of the corporate department at Al Tamimi, which is the largest law firm in the Middle East. I also am a venture capital lawyer and manage the largest team of venture capital lawyers in the region. I serve on the board of the Middle East Venture Capital Association. I'm one of the founding members and the chairman of Dubai Angel Investors. I'm here to talk about venture. Great. Well, welcome everybody. I think, we have all known each other for a few years now. We've interacted in some form or another in the context of what we're doing in the venture space in the region. I think it's fair to say that the environment has been going through some really positive and rapid changes over the last few months. A lot of liquidity has come into the market. A lot of international capital is coming to our region. So I thought it'd be really nice for us to sit around and have a discussion about what we're seeing, our experiences of how deals are getting done, and talk about what we think the future holds for us all. So tell us a little bit, maybe what brought you, Basil, to the venture capital world?
Well, it's kind of an interesting story. I started my career. I was fortunate enough to start my career in venture as an associate in a fund based out of San Francisco. It was a CVC, so a corporate venture arm of Reuters. I knew nothing about venture capital, honestly. It was 97. And learned a lot, obviously, in that work experience. We had 17 IPOs in an 87 company fund. It's $400 million in all. And I just realized how much entrepreneurs really do change the world, if you like, right? So they take on the challenge. Now, fast forward to 2016, I was coming off a job and kind of thinking about what I wanted to do next. I had a gap year, as I sometimes call it. And I realized that the scene here in the Middle East was underdeveloped, but also just coming to the point where it's going to come into its own. Thanks to people like PK and others, enough entrepreneurs, enough track record was starting to build up that more people were coming into it. What I find amazing about the scene today is that when you say you're an entrepreneur in the Middle East, it's no longer seen as something negative. Actually, it's seen as something positive, right? It used to be that everybody wanted to be an engineer, doctor, lawyer, Abdullah. But now, I think it's become acceptable to be an entrepreneur. And I think that's a big moment for us here in the region. The other thing is that regional entrepreneurs don't have access to capital the same way others around the world do. So the lack of funding or the gap is quite significant, which is ironic, right? Because we live in one of the richest parts of the world, but most of that investment is outbound, not inbound. And so working with government, working with private family offices and so on, the opportunity to bring that capital into the region became very apparent. And that's what got me into it. You fast forward now, again, another 3-4 years since we started. And to your point, the region's really changing rapidly. It's kind of overwhelming. Now getting to the point where there are actually deals announced where I'm like, I didn't even hear about this company. Which I don't know if that's a good thing or a bad thing. I guess it's good. Just shows you how big the industry has become and how prevalent, competitive, lots of opinions on what makes a good investment. Clearly, investors are starting to diversify in their strategies. I think that's all, positive for the region.
And you mentioned a really interesting point, Basil, which is the shift in terms of the cultural perception of entrepreneurship. And as you said, we live in a region where there's a lot of capital. And all of a sudden, there's been an increase in the interest in this particular asset class and this particular space. I mean, you guys have been around here in the region for quite a long time looking at entrepreneurship. I'm sure you've noticed the same trend that Basil is talking about. So from your perspective, is it driven by, great stories like Souk.com and Careem, or is it driven by a realization that there's a need to drive economic growth in the SME sector? I mean, what do you think is sort of driving it?
So money follows usually the kind of successes that we see. So the successes of the Careems, the Souks are the reason why money actually starts flowing in these classes of investment. Before that, we couldn't find people who would put money in a venture class investment or early stage, Series A or whatever. Even if you were forming a fund, finding LPs here was very difficult for people to do that. Like typically you would invest in real estate and they would not look at different classes. So that has happened because of all the PR, all the output that you've seen. But at the same time, as a group, we should work towards it and not focus just on the unicorns. I think a lot of other success has happened the sub-billion-dollar success also happens. In fact, most people make more money. A particular investor was telling me that he made far more money in the InstaShop, deal than he would make in his primary investment or primary work. So that gives you a very good idea of that is probably a far better class of investment in that sense. So I believe in this part of the world, we are sitting on the cusp of a very, a market which is very different from others. So in terms of paying capacity, penetration of, say, credit cards, if you're talking e-commerce, all this is a different market, and we have a far better opportunity to do with far less number of people or a smaller environment and be successful at the same time. So I think that has happened. That is the curve that we are seeing today.
I mean, it's possible to argue, I would think, that those big success stories that we're talking about, great stories as they were, are almost coincidental to what's happening in the space, because actually with the influx of money from outside the region, and there's a lot of it right now coming from the US, from Europe, from the Far East, as well as from regional capital centers, that we're seeing, or investors are seeing, an opportunity to maybe invest in emerging markets stories, in fund managers or in companies that are arising in the region here. But I mean, Philip, for example, you started covering the ecosystem in the MENA region to begin with. You've recently expanded your view to Pakistan, Turkey. I think you're also expanding to sub-Saharan Africa. And that's sort of mirroring a little bit what we're seeing, which is that a lot of investment into those regions is actually being managed and coming out of this region, or involves international investors coming into sort of regional fund managers who are looking out to those geographies. I mean, how much of that are you seeing in terms of what you're looking at?
So number one, the reason that we're covering these areas is because there's a lack of information at the venture capital level, because the regulatory standards and the reporting requirements are not the same as what you find in the US and Europe, and therefore it's a lot more hand-holding and data grabbing than it is readily available. The beauty is that you begin to see some of the similarities that exist across these opaque markets, as well as some of the differences. Here in the region, obviously, there is the flight of the ecosystems of the UAE, Saudi Arabia, and Egypt, given size of population, and the different kind of commercial and demographic metrics that you see. Pakistan is seeing an influx of funds that are coming from international markets, and a lot more from Southeast Asia than what the Middle East is experiencing. When you look at Turkey as an example, a lot of the funding, which has really been accelerating in the last 2 years, is FDI funding, thanks to European type of institutions that are funding in Turkey. When you look at Africa, you begin to see trends that are coming from UK, European, Chinese investors, not necessarily from the Middle East. One of the things that's very dear to me is actually all of them are different opportunities. When you break down the silos that exist across these different markets, you begin to see further cross-pollination. Ultimately, scale for any startup in any of these geographies is the name of the game. And one of the hesitations for any companies looking to enter new markets is they have not seen other people do it before. And that comes through experience, that comes through information gathering, that comes through returns for investors who are ready to take bigger risks. So many similarities, many differences between them, but once you break down those silos and the interest comes from abroad, ultimately from return on investment, we expect to see more capital being put into these markets.
I mean, just to kind of follow on to that, one thing about all the capital that's flowing to the region and from the region into the asset class, I think there is a risk of a bit of siloization. I think to PK's point, it's good that there's competing hubs, but if that moves to, let's just localize capital in country, then I think that could be a challenge for the ecosystem overall. If you think of the Middle East economy as a whole, so from the Indian Ocean to the Atlantic Ocean, it's a little larger than the size of Spain's economy, which is not that large to begin with. And so I think something that we should all be aware of as the ecosystem develops is the need to aggregate the region as a whole, and plus Turkey, plus Pakistan, plus East Africa, because there are a lot of learnings across those geographies that can be transported from one place to another. And I think we do well to focus on the wider kind of emerging market remit as opposed to, very country-focused remit.
Especially that I think, if you think about it from an exit perspective, I think buyers, or even if you're going to take something public, will reward the companies that have been able to make it into a region rather than the 20x countries or 30x countries, whichever number you want to take as the geography, right? Because we say Middle East, it's not, there's nothing called the Middle East, there's nothing called Africa, right? There's countries, and even in some countries down to the city level or emirate level, etc. The reward will come for the entrepreneurs and the investors who can, take a business, let's say in Dubai, and then make it a UAE story, or take a UAE story and make it a UAE Saudi, and so on, right? Doesn't mean you can't build a business just on one country. That's not what I'm trying to say. But it does take work, effort, time to build cross-border businesses. And investors will, I think acquirers will pay a premium for that.
Yeah, I mean, I'm sure it's a truism to say that one of the reasons that the biggest ecosystem is in the US and the biggest and largest volume of number of exits is in the US is because the US is a colossal market, and therefore any company that develops a solution can sell it at scale in a market like the US, and they don't really need to look beyond. I mean, for us, presumably what we need to do is see companies that are actually, as you're saying, aggregate, service delivery, sales across a much, much larger region of countries that are kind of pieced together.
I mean, that's why, Kareem Souk, for example, are the scale they are, because, Kareem, for example, went from, Pakistan to Turkey, GCC to Morocco. And though, 3 or 4 countries dominate the kind of volume and the revenue and the rides, for example, but the ability to aggregate that entire geography is what makes it so valuable. And, I think we ignore that at our peril to some degree.
No, absolutely. So Khalid, I mean, what do you think is the challenge for a company that's seeking to enter multiple markets in the region in terms of getting that market entry done successfully and seamlessly?
I think to Basil's point, there is no Middle East, right? They're quite idiosyncratic within each individual geography, right? I think we like to think that the Middle East is one big kind of cohesive unit. It's not at all. From the high level of regulation down to kind of consumer preferences are quite different, right? So if you're an entrepreneur, irrespective of the field that you're in, navigating those different spaces is immensely complex, time-consuming, difficult. You have to build networks over and over again. But again, the successful founders are ones that are able to kind of navigate this space, and the funds that are able to kind of play in those different areas, which is very, very difficult. So, while we say it's an aggregated opportunity, because if you do that, it's hard to do, so it's very defensible, and you access multiple markets that are of scale collectively. But to actually do that in practice and to address those different demographics, different governments, different regulations, etc., is immensely complicated and complex.
Can I build on that just in one point? We were discussing in the office the other day. We kind of had a little brainstorm. Actually, yes, founders. I agree with you, Khalid. But actually, the teams is an interesting discussion. What type of team does it take to be successful in the region? Right? What's the diversity? What's the mix of that team need to look like? And if you look at some of the companies that we've been reading about recently in the press raising large capitals, it's interesting to look at the diversity of that team, right? To think about and I find it just as an Egyptian in the region, I find it ironic to think I want to take a little bit of every country's personality and fuse it into the founders, right? Because you have the kind of more marketing, sales, stereotypes of certain founders, more technical, more commercial, more, et cetera, et cetera. And I think bringing a diverse team, I think one of the things that founders have to focus on is the team they build around them, right? If they bring that diversity in, it makes such a difference in the fundraising journey, in the ability for investors to see skill sets that are complementary, that build out over time.
And that's obviously a criteria that you would probably apply much more in early stage investments, when you're beginning to look at a company before it's really started generating sales and scale, or generating revenue at scale. Once you start looking at more advanced companies that maybe have already put a foot in multiple markets, as an investor, what are the criteria that you look at there when you're diligencing for example, a potential investment? Is it just still team, or is there more?
It's such a long list. I mean, I think our due diligence, I'd love to compare notes with some of you here, because the list of due diligence for especially more later stage companies just keeps getting longer and longer. For us at Global, top of the list is still remains governance, transparency, and the ability for the company to behave like a company, right? Yeah. There's a point at which it no longer belongs to the founder. The founder is obviously a very important part of the journey, but it's now a company that has, multiple shareholders, and therefore the way the founder or the CEO communicates with the shareholders is incredibly important. So we look at, do you have a board? Do you have an independent? Are you, what are the way you govern and manage your capital, cash? That stays top of the list, because it sounds ironic, but you're not going to make it all the way if you don't start from a relatively early stage running the business as a business should be run. It's not your, I don't think an entrepreneur should think of it as their own little project, right? Maybe it starts that way, but it evolves out of that. Now, beyond that, of course, there's all sorts of metrics. There's the profitability, the gross profitability question has become ever more important in the last 18 months. And I think the pivotal moment is kind of that WeWork moment that everybody talks about. There are other examples. Uber went through the same change, and that caused an entire change of management on their part, etc. The gross profitability, I think about it as how big is your engine, right? You can have a big GMV, but if you have a very small gross profitable, or if you're negative, that's like trying to run a big ship with a small engine, right? It's really difficult to maneuver that, and you have very limited options. The opposite is true. If you're running a SaaS software business, you may have much lower revenue, if you like, but you have such a high profitability that you can invest in your technology, you can invest in customer, requirements a lot faster, a lot quicker. And so that becomes kind of the next big question for us around, what does that industry? And it's interesting because, take for example the B2B commerce that's kind of taking off in the last few months, right? So all of the logistics / B2B commerce providers, right? Delivery between FMCGs to retail shops, etc. There's how many of them at this point?
There's
there must
over
be like
10 across the region.
Yeah, there must be 10 that you can just think of off the top of your head. And if you dig in, you probably find like 20 or 25 of these companies emerging. And the variety of the models and the way that entrepreneurs have thought about it differs quite a lot, right? And I think the biggest mistake is they think, what I did in Saudi can apply to UAE. No, it doesn't, right? Markets are different. And again, to build scale, to go back to that point, you have to think through what you're trying to achieve in the long term and then try to solve for it now.
I think just going back to the GP point, the gross profit and just kind of profitability generally, or efficiency generally, efficiency and conversion of revenue down to kind of profitability on some level. There's this, Amazon pioneered this idea of, I don't need to turn a profit, net profit or EBITDA so that I can grow. I think then, the likes of Uber, etc., took that to mean gross profit. And now you're getting to a point where in emerging markets, a lot of founders are, I just want to grow at any cost. I think we're taking those learnings now, that doesn't really work anymore, because you really need to demonstrate how you flip the switch from growth to kind of actual profitability. And I think too many people ignore that piece, right? They're just focused on customer acquisition at any cost, especially in an environment where venture dollars are available and are basically subsidizing the consumer experience. So that's kind of a big piece to think about in due diligence and in thinking about what makes for good companies.